To help set up the trading day, let's welcome in Kevin Hincks. He's the co-host of Fast Market. He's live from the CBOE. Kevin, good morning. Let's start with the economic data because it's a pretty busy morning on that front. We got PPI, we got retail sales, and of course we got weekly jobless claims. What did we learn?
Well, I think we learned, good morning, Caroline. I think we learned that inflation is coming down, much weaker numbers in terms of PPI, that's prices at the producer level. Then, I'll give them to you quickly. Producer prices, a monthly number down 0.5%. That's much lower than the up 0.2 that was expected. Year over year, from 2.7% to 2.4%. Core, they were looking for up 0.3, comes in down 0.4. That's much weaker than expected. The core year over year, 3.1%. That's down 0.2 from last month. So overall, inflation at the producer level coming down. Then we got retail sales. That was positive, but a little weaker than expected. The headline up 0.1. That is actually in line. X vehicles up 0.1. That's 0.2 shy of expectations of up 0.3. X vehicles and gas up 0.2. That's considerably less than last month, but all of last month's numbers were revised higher. So a little bit, even a strong number that we got last month from retail sales, all those were revised higher, but this one's certainly a softer number. Not negative, but a softer number than expectations. Then we got jobless claims, pretty much in line there, 229,000, 1,000 higher than last week, but like I said, in that high 220s, still indicative of a strong labor market, but definitely lower prices and inflation. And now the question is, what does that do for Jerome Powell? He's making comments this morning that rates are going to stay higher for longer based on economic changes and economic policy in flux. So the comments he's making this morning are talking about that. We also have comments from Jamie Dimon looking at the overall economy. There's a lot going on here, a lot for investors to consume and digest to start the day. You're going to talk about Walmart's earnings. We've got Dick's Sporting Goods buying Foot Locker. I'm sure you'll talk about that throughout the show. There's a lot going on here, Diane. But one of the rhetoric is, oh, we've run so far. We've come so far, we have to back off, don't we? And some traders, some analysts still calling for softer markets. But so at least to start the day, down about 1/3% in the S&P, down about almost 0.5% in the NASDAQ.
So, Kevin, as we think about what this data could mean for the Fed, it seems like it's reflective of a steady economy, yet you said we're hearing from Jerome Powell about rates staying higher for longer. So I guess the Fed doesn't need to cut rates because the economy is weak, but also if inflation isn't as bad as expected, why do rates need to stay high?
Interest rates were raised because of inflation. If inflation's coming down, if you don't want the Fed funds rate to become too restrictive, you should be lowering interest rates. Now, if you blame it on uncertainty in economic policy and people thinking that higher prices are coming, Walmart did warn about that in some of their earnings release today. If they're waiting to see if that happens, that could be a reason to do nothing. But the risk is that you weaken the overall economy by leaving the Fed funds rate too restrictive as inflation comes down. It almost feels like if you want to navigate a smooth landing, which is what we've been talking about, they need to come down as the overall inflation picture come down. Jerome Powell right now doesn't seem really ready to do that, Caroline.
Kevin, as we think about, the economic data largely better than expected, I would say. Of course, PPI not as market moving typically as CPI, which already, could be priced into this market. But the fact that we're still seeing futures in negative territory, even though those losses look pretty modest with 25 minutes to go before the bell, does that indicate that this rally could be out of steam here?
Well, here's what it means. It means that the futures overnight we're looking at the foreign markets and our softer pre-open. Remember, once the U.S. markets open, they take over the economy of the world and they set the tone. So, yes, a long rally and several big up days, we're softer to start the day. That does not mean we're going to end soft. So yes, Jamie Dimon calling for more volatility. A lot of people talking today, talking about the markets because they've come back so far off the recent lows. So I think that there's a lot of uncertainty here about what is going on in the market. The good news is the hard economic data, the hard data still keeps coming in saying strong jobs, strong U.S. economy, and inflation coming down. The sentiment data, the softer data that we're going to get tomorrow with University of Michigan consumer sentiment, that's the data that seems to be worrying investors. So we'll see as that relationship continues to evolve. The hard data still doing well, Caroline.
Okay. All right. Kevin Hincks, thanks so much for kicking off the show with us and breaking down those prints.